What if the biggest reason you're losing money in the market has nothing to do with your strategy and everything to do with the way you think? Most traders spend years searching for the perfect setup, the perfect indicator, or the perfect mentor, never realizing that their greatest enemy is the voice inside their own mind. The harder they try to control every trade, the more control they lose over themselves. And that's the psychological trap almost nobody sees until it's already cost them thousands. Imagine waking up one day and realizing that profitable traders don't think more than everyone else. They actually think less, but in a completely different way. That single shift changes how they handle fear, confidence, losses, patience, and every decision they make under pressure. In this video, you'll discover why your brain keeps pulling you toward bad trades even when you know better, why intelligence alone doesn't create consistent profits, and how a simple change in the way you process uncertainty can completely transform your results. But here's what most people never realize. The most dangerous habits don't feel dangerous at all. They feel logical, responsible, and even smart. That's why so many talented people stay stuck while ordinary traders quietly build consistency year after year. As we move through each chapter, you'll begin to recognize mental patterns you probably never noticed before. And once you see them, it becomes almost impossible to trade the same way again. Stay with this until the very end, because the final chapter reveals the single mental principle that separates calm, disciplined traders from those trapped in an endless cycle of emotional decisions. Most people never reach that point, which is exactly why they never experience lasting consistency. And if at any moment something in this video makes you see yourself differently, let me know in the comments, because that moment of awareness could help someone else begin their own transformation. If you believe more people deserve to understand the psychology behind real trading success, share this video with someone who needs it, and subscribe so you don't miss the next lesson that could completely change the way you approach the markets. Chapter 1. Why Overthinking is Costing You. Every trade. Imagine two traders looking at the exact same chart. They have the same information, the same market conditions, and even the same trading strategy. One enters the trade with confidence, follows the plan, and accepts whatever happens next. The other hesitates, zooms into lower time frames, checks 3 more indicators, scrolls through social media looking for confirmation, and then either enters too late or skips the trade completely. The difference isn't knowledge, it's psychology. Most people believe that thinking more leads to better decisions. That idea works in many parts of life. But in trading, it often creates the opposite result. Every extra thought opens the door to another doubt. Every doubt creates hesitation, and hesitation slowly destroys consistency. Your brain is trying to protect you. It wants certainty before taking action. The problem is that certainty doesn't exist in the market. Every trade is simply a probability, nothing more. Yet your mind keeps asking impossible questions. What if this trade fails? What if I lose again? What if I wait just a little longer? Those questions feel intelligent, but they quietly trap you in an endless cycle of analysis. Think about the last trade you regretted. Was it really your strategy that failed? Or was it your inability to trust the process? Most trading mistakes happen before the trade even begins. Fear changes your decisions long before price ever moves. Instead of following your tested rules, you start negotiating with yourself. You move your entry. You reduce your position. You wait for one more signal. By the time you finally act, the opportunity has already changed. Here's something even more surprising. Overthinking isn't caused by lack of confidence. It's often caused by the need to avoid emotional pain. Your mind believes that if it analyzes every possible outcome, it can eliminate disappointment. But the market doesn't reward perfect predictions. It rewards disciplined execution. Professional traders understand something that beginners usually miss. They don't try to eliminate uncertainty. They learn to become comfortable with it. That's a completely different mindset. Instead of asking, "Will this trade win?" they ask, "Does this trade follow my plan?" That single question changes everything. Because once your focus shifts from predicting outcomes to executing your process, fear begins to lose its control. Results stop controlling your emotions. Your behavior starts controlling your results. The market doesn't expect perfection from you. It expects consistency. And consistency is impossible when every decision is driven by the need to feel safe. The moment you stop demanding certainty is the moment you begin thinking like a disciplined trader instead of an anxious gambler. But this raises an even deeper question. If overthinking isn't the real problem, then what hidden mental habit keeps pulling traders back into emotional decisions, even after they promise themselves they'll never make the same mistake again? That's exactly where the next chapter begins. Chapter 2. The mental shift that changes every decision. Picture yourself standing at the edge of a swimming pool. You can read every book about swimming, you can watch hundreds of videos, you can memorize every technique. But until you step into the water, your mind will continue imagining dangers that don't exist. Trading works the same way. Most traders are not fighting the market. They're fighting the stories their minds create about the market. Every loss becomes proof that they're failing. Every winning trade convinces them they've finally figured everything out. Their confidence rises and falls with every candle, every profit, and every setback. That's exhausting. And it's one of the biggest reasons consistency feels impossible. Here's the shift that changes everything. Stop treating each trade like a final exam. Start treating it like one page in a very long book. A single page never tells the whole story. Neither does a single trade. The moment you believe one trade defines you, your emotions become attached to the outcome. Fear grows stronger before losses. Greed grows stronger after wins. Suddenly, you're no longer following your trading plan. You're protecting your ego. And the market has no interest in protecting anyone's ego. Think about how differently you would trade if you already knew that the next 20 trades, not the next one, would determine your overall results. Would one small loss still feel devastating? Would one big win make you feel invincible? Probably not. Your perspective would completely change. That's exactly how disciplined traders think. They understand that consistency is never built on individual outcomes. It's built on repeated behavior. They judge themselves by the quality of their decisions, not by the money made or lost today. This creates emotional freedom. Instead of chasing certainty, they chase discipline. Instead of reacting, they execute. Instead of predicting, they prepare. Notice how different that feels. When your identity is tied to making money every day, every losing trade feels personal. But when your identity is tied to following your process, every trade becomes an opportunity to practice discipline. That subtle change removes enormous psychological pressure. Ironically, the less pressure you feel, the better your decisions become. Because clear thinking doesn't come from confidence alone. It comes from acceptance. Acceptance that losses are part of the business. Acceptance that uncertainty will always exist. Acceptance that no strategy, no matter how powerful, can predict every outcome. Once your mind truly accepts these truths, something remarkable happens. You stop trying to control the market, and you finally begin controlling yourself. That is where real consistency begins. Not on your chart, but inside your mind. But there's still one obstacle that quietly destroys even disciplined traders. It's the emotional habit that convinces you to abandon your plan at exactly the wrong moment. Most people never notice it until it's already too late. In the next chapter, you'll discover why trusting your process is far more difficult than creating one, and why mastering that challenge separates consistent traders from everyone else. Chapter 3. Trust the process, not your emotions. Imagine planting a seed in the ground. You water it every day for a week, but nothing appears. If you keep digging it up to check whether it's growing, you'll destroy the very thing you're trying to build. That is exactly how most traders treat their trading plan. They create a strategy, test it, promise themselves they'll follow it, and then abandon it after just a few losing trades. Not because the strategy stopped working, but because their emotions became louder than their discipline. The market has a strange way of testing your patience. Just when you begin to trust your system, a losing streak arrives. Doubt starts whispering in your mind. Maybe this strategy isn't good enough. Maybe everyone else knows something I don't. Maybe I should change my rules. At first, those thoughts sound reasonable. But here's the hidden danger. If you constantly change your process every time your emotions become uncomfortable, you'll never know whether your strategy actually works. You'll spend years searching for a perfect system when the real problem has been your inconsistency all along. The market doesn't reward constant adjustment. It rewards consistent execution. Think about the world's greatest athletes. They don't invent a new technique every time they lose a game. They review their performance, learn from mistakes, and return to the fundamentals. Their confidence isn't built on always winning. It's built on trusting the work they've already done. Trading requires the same mindset. Your edge doesn't come from predicting every move. It comes from repeating the same high-quality decisions over and over, regardless of the last outcome. That's much harder than it sounds, because your emotions live in the present. They only care about what just happened. If you lost your last trade, fear tells you the next one will probably lose too. If you just made a huge profit, excitement tells you to take bigger risks. Neither emotion is interested in the bigger picture. But discipline is. Discipline reminds you that one trade changes nothing. 1 week changes nothing. Even one bad month doesn't define your future if your process remains strong. This is why professional traders build routines instead of relying on motivation. They prepare before the market opens. They follow clear rules. They document every decision. And after the market closes, they evaluate their behavior before they evaluate their profits. That habit creates something incredibly valuable. Self-trust. Not the kind of confidence that disappears after a loss, but the quiet confidence that comes from knowing you'll follow your plan no matter what happens next. When you trust yourself, the market becomes less emotional. The noise becomes quieter. Your decisions become simpler. And simplicity often leads to better results than endless complexity. But even after building that kind of discipline, one final challenge remains. It's the invisible difference between traders who stay consistent for a few weeks and those who remain calm, confident, and profitable for years. That final lesson changes everything. And it's where the true transformation begins. Chapter 4. When clear thinking becomes consistent profit. There comes a moment in every trader's journey when the market stops feeling like an enemy. The charts haven't changed. The volatility hasn't disappeared. Wins and losses still happen. But something inside you is different. You no longer wake up hoping the market will make you happy. You no longer sit in front of every candle searching for excitement. Instead, you approach each trading day with a quiet confidence that comes from understanding one simple truth. Your job is not to control outcomes. Your job is to control yourself. That realization is the turning point. For most people, trading begins as a search for money. They believe that more profit will bring more confidence, less stress, and a better life. But over time, they discover something unexpected. Money doesn't create emotional control. Emotional control creates better decisions, and better decisions create the possibility of consistent profits. The order matters. Many traders spend years trying to master the market while completely ignoring the person making the decisions. They upgrade indicators, buy expensive courses, and search for secret strategies, yet they never take the time to understand their own habits, fears, or reactions. The most valuable edge is rarely hidden on a chart. It's hidden in your daily behavior. Every time you follow your rules despite fear, you're building discipline. Every time you accept a loss without chasing the market, you're building emotional strength. Every time you wait patiently instead of forcing a trade, you're strengthening the identity of a professional. Those small moments may seem insignificant, but they shape the trader you become. Results are temporary. Identity lasts. If you see yourself as someone who must always be right, the market will constantly challenge your confidence. But if you see yourself as someone who consistently follows a proven process, every trade becomes an opportunity to reinforce that identity. And once your identity changes, your behavior begins to change naturally. You stop reacting. You start responding. You stop chasing. You start waiting. You stop fearing uncertainty. You start respecting it. That's the difference between emotional trading and professional trading. The market doesn't pay people for working harder. It rewards people who can remain disciplined when everyone else is emotional. So the next time you open a chart, don't ask, "How much money can I make today?" Ask yourself, "Can I become the kind of trader who follows the plan no matter what happens?" Because if the answer is yes, profits become a byproduct, not the goal. Think less. Trade better. Not because you're ignoring the market, but because you've finally learned to quiet the noise inside your own mind. And remember this whenever you're tempted to overthink your next decision. The trader who masters the market may earn money. The trader who masters himself can keep it.